Eugene, clearly we've got the Fed tomorrow as well. Is the market ignoring the risk, whether on the fiscal or monetary side, that stimulus does not continue for the rest of the year at the same pace as it has for the last few months?
Well, I think it is. I think the market fully expects to get some kind of stimulus and some kind of package to pass, and whether or not there's liability protection or not, because there's an election in November. I do believe that the Democrats and Republicans will get together and get a deal. But it's very important that we do, or I think the market will suffer greatly.
Shares of McDonald's sinking today after missing the street's earnings estimates and posting a 30% sales decline compared to a year ago. But despite disappointing on the bottom line, there were some bright spots in the results. The fast food chain did see an improvement in U.S. comparable sales each month throughout the quarter. And while the company did not issue formal guidance on the call, CEO Chris Kempczinski said he believes that Q2 will be the trough in McDonald's performance. And I guess we got a snapshot here, Mike, of how difficult it is for these big restaurant chains. Even if things have improved, they haven't improved resoundingly, and there's still a long way to go.
No, I mean, McDonald's is obviously a play on people moving around and stopping when they're hungry, and clearly not going to be able to get out in front of the broader reopening efforts in various parts of the country. Do you think the way the market is treating it now, yes, backing off today, but the stock is holding the vast majority of its gains off the March lows. McDonald's is in the category of when it comes back, not if it comes back, as opposed to a lot of traditional retailers where this period seemingly has really disadvantaged them over the long term. So 2.5% dividend yield probably also helping to sort of lessen the damage a little bit in McDonald's.
Would also just note that they pointed out that the China results appeared mixed. The early rebound looked like became a little more choppy and stalled. Eugene, is that any indication of what consumer spending is going to look like in this country? Because McDonald's did say that U.S. same-store sales trends did improve throughout the quarter and were trending positive.
Right. I thought that was very interesting. I think there was like a 41% drop in comparable same-store sales internationally with McDonald's. And I'm not sure exactly why that was, because, you know, China came back online a little bit earlier. They don't have as many drive-throughs there. That might play some role. But I'm a little concerned with that. I think that they're doing as well as you might expect here in the U.S., but their international sales were pretty abysmal. And I think you might see something similar with Starbucks when they're announced.
Let's talk about Starbucks. It is one of a handful of big names set to report after the bell. Kate Rogers here with a preview for us. Hi, Kate.
Hey there, Sarah. Analysts are projecting a loss of 59 cents a share on revenues of $4.06 billion for Q3. Same-store sales projected to decline by 42.2% overall. We'll be looking out for any commentary on consumer trends and same-store sales performance potentially improving in recent weeks in the U.S. and also in China, its second biggest market. The company said in June that it expected fiscal Q4 earnings to improve and cash flow to be positive by the end of June, as most of its locations had reopened in the U.S. with limited capacity. McDonald's CEO did talk this morning about signs of a recession. We'll be curious to see if Starbucks echoes that sentiment this afternoon, guys. Back over to you.
We look forward to that one, Kate. Thank you. Chipmaker MD also set to report results in just a few minutes. Josh Lipton has a preview. Hey, Josh.
So, Will, if investors have piled into AMD, check out that stock. It's up about 50% now this year. It's up about 30% just this month, on track for its best month since January 2019, as investors bet that AMD can capitalize on Intel's latest stumbles. Remember, Intel recently announced an important production delay. One big number to watch in this report, revenue for AMD's server chips. That's the company's highest margin product that it sells. Analysts are looking for $400 million in the quarter. Guys, back to you.
Lipton, thanks so much for that. We spoke earlier with Mike about how the setup for this one is particularly hard coming into earnings. Eugene, whether it's AMD and the chip makers or the bigger tech companies due to report in the next couple of days, if one of them disappoints meaningfully, could that drag down the whole NASDAQ, or do you think it'll be stock-specific, the reaction?
I think initially it would be stock-specific. I mean, you know, when Intel came out with this announcement about the 7-nanometer chip, it dropped in comparison to AMD and the rest of the industry, and the rest of the technology companies held up. I do think, though, there will be sort of a warning sign. You've had some rotation in the last 2 weeks away from the so-called FANG stocks to more cyclical names, as I think the market's a little bit tired and valuations are pretty extended.